Okay, let's dive into this. Welcome to today's explainer. I am so glad you're here with us. We are going to unpack what was a very turbulent day in the Indian stock market, specifically looking at the session from July 23rd, 2026. Now, if you've been watching the tickers today, you know the numbers are basically flashing red across the board. It's a lot to process, right? But hey, don't worry. We're going to break all this complex financial data down into a really clear, logical story. Right off the bat, 4 out of 10. That's our overall market mood rating for the day, which firmly places us in cautiously bearish territory. That number instantly gives you a sense of the slightly gloomy, hesitant tone that kind of just settled over the entire trading session. There's definitely hesitation in the air, and as we go through this explainer, you are going to see exactly why investors are proceeding with so much caution right now. So here's our roadmap for today. We'll quickly hit the market snapshot, look at what drove the drop, examine the institutional tug-of-war, map out the key technical battlegrounds, check out the global ripple effects, and finally, wrap up with the outlook for next session. Starting with Section 1, the market snapshot, and specifically our 4th consecutive day of losses. This wasn't just a sudden one-off drop. We are looking at a narrative of ongoing sustained pressure. When we put the closing numbers side by side, you know that unified downward trajectory is literally impossible to ignore. The Nifty 50 closed at 23,869.60, shedding over 126 points, which is about 0.5%. And right alongside it, the Sensex dropped 364 points to close at 76,391. That matches that negative 0.5% slide almost perfectly. Both major indices are bleeding, and they're doing it together. And it definitely wasn't just the broader indices taking a hit today. Bank Nifty closed lower as well. Now, what this tells us about the underlying market psychology is absolutely crucial. The banking sector, well, it's basically the engine of the market. So when we see weak sentiment here, it reflects a much broader pain that's being felt across all major sectors of Indian equities. Moving to Section 2, what drove the drop? Let's look at the macro and micro pressures and really get under the hood to see exactly why these indices are bleeding. What we've got here is essentially a perfect storm of catalysts. First up, rising geopolitical tensions in the Middle East are heavily weighing on global investor confidence. And as we all know, markets absolutely hate uncertainty. Next, we have elevated Brent crude oil prices, dragging inflation concerns right back into the spotlight. Then, looking domestically, we're seeing persistent selling from foreign institutional investors. And lastly, the ongoing Q1 FY27 earnings season is creating intense, stock-specific micro moves right in the middle of all this macro chaos. All right, Section 3, the institutional tug-of-war. Foreign selling versus domestic buying. Because today wasn't just a unified slide. It was a fierce battlefield between two major opposing institutional forces. And this brilliantly illustrates what happened out there today. On one side, we have foreign institutional investors, the FIIs, acting as relentless net sellers. They kept up their selling pressure, really hammering the large-cap stocks. But on the flip side, domestic institutional investors, our DIIs, were net buyers. They actively stepped in to absorb a ton of that selling volume. Literally, without the DIIs acting as a shield today to cushion the decline, the losses we saw could have been significantly deeper. Section 4. Key technical battlegrounds. Where exactly is the market fighting? Let's transition to the charts to see where the mathematical ceilings and floors actually are. Think of this like we're breaking down a sports play. The market is currently trapped right between a ceiling and a floor. Our immediate resistance, that ceiling we just can't seem to break through right now, is sitting at 24,000, with further hurdles at 24,120 and 24,250. Now on the downside, our immediate support, which is the crucial floor holding us up, is right at 23,800. If that floor cracks, guys, we could be looking at 23,720 or even a drop down to 23,600. To confirm these levels, we just have to look at the options open interest to see where traders are actually putting their money. The highest concentration of puts, which essentially act as a safety net, is at the 23,800 strike. That solidifies it as our strongest support. Meanwhile, there's this massive wall of calls built up at the 24,000 strike, marking major resistance. This positioning clearly shows that traders expect the market to remain heavily trapped inside this very specific range. So, the big takeaway here is this. Our short-term trend right now is bearish to neutral. We're basically stuck in a holding pattern. Unless a massive trigger emerges to push us into a sustained move above 24,000 to improve sentiment, or conversely, a break below 23,800 to invite a flood of new selling, we're essentially fighting in a very tight box. On to Section 5, the global ripple effect, risk-off sentiment worldwide. Because obviously, India doesn't trade in a vacuum. The shockwaves we are feeling locally have their roots spreading worldwide. We're witnessing a classic widespread risk-off sentiment globally. Look at the US futures and the Nasdaq. They're weak and flashing red due to intense pressure on technology stocks. Over in Europe and Japan, the mood is totally mixed, muddied by all that geopolitical uncertainty. So what do investors do when they get scared? They hide. That is exactly why we're seeing strong, firm demand in traditional safe havens like gold and the US dollar. Capital is flying away from risk and straight into safety. And then, well, there's the elephant in the room. Brent crude oil has just crossed a major psychological threshold, greater than $100 a barrel. This is a massive, massive driver for all that global market anxiety we just looked at. Expensive oil immediately fuels inflation fears. That makes central banks nervous, which in turn makes stock market investors very, very defensive. Section 6, Outlook for next session. Let's move to and see how this builds our outlook for tomorrow, focusing on what to watch. Here are the two potential paths you need to keep on your trading screens tomorrow. In our bullish scenario, Nifty manages to hold the line above 23,800. If it finds the strength to actually break above that 24,000 ceiling, we could start targeting 24,120 or even 24,250. But in our bearish scenario, the pressure just becomes too much. Nifty breaks below 23,800, which basically opens the trapdoor toward 23,720 or a much deeper 23,600. Ultimately, tomorrow's session is going to be determined by the exact same tug-of-war drivers we saw today. We have a heavy tide of negativity, FII selling, high crude oil prices, and geopolitical uncertainty all pulling the market down. On the positive side, though, we have that domestic institutional buying support acting as our anchor. And the wild card, the main catalyst that could swing individual stocks, remains the ongoing Q1 FY27 earnings season. It's our main domestic hope right now. So what does this all mean? Will that absolutely crucial 23,800 support level hold firm against these massive global macro headwinds? Or is the floor about to just drop out on the Indian market? The opening bell tomorrow is going to be a fascinating test of strength. Thank you so much for joining this explainer. Keep your eyes glued to those charts, and I will see you next time.